The rally in Virtuals protocol on the base chain sees no end. Who continues buying here? Is there another 3, 4, 5x from here, or are we close to the top? Let's have a look at the on-chain metrics. Let's see if there's still continued adoption or if this is now starting to become manipulation. Now, this is not the first video on Virtuals on this channel. The very first video outperformed the average video by quite a bit. So an average video is here in gray, and that first virtual protocol video is the line in blue. Another video followed, and here's another one. Those two actually did not outperform, interestingly enough. And so the first video was published when the price was still at 41 cents. Now we are at $1.65. So feel free to subscribe over here. I publish videos on various meme coins regularly, and I try to be early. I try to catch the wave when there's still upside potential. And so today we are up 7%. This week we more than doubled, and this month we more than 4x'd. Since listing on CoinMarketCap, the price appreciated by more than 3,000%. Now, there are several effects at play here, right? The Virtuals protocol is a launchpad for AI agents on the base chain. And launchpads in general, such as Pump.fun, but DeFi protocols as a whole are getting a lot of traction again. This is a long-term market cap chart across all of DeFi, across all chains. And we had our nice DeFi summer in 2021. And subsequently a massive depression with the implosion of the Terra Luna protocol. And since September, October, we are turning around again and we are accelerating in our growth. We aren't yet at old heights, but at least things are going up. And of course, Virtual Protocol can, as one of the central protocols on the base chain, profit from that. Now, Base is one of the fastest growing major blockchains. Its total value locked went up by 54% in the last month, pretty much in line with Ethereum and only beaten by Solana. And so here's the total value locked over time for the base chain. Not too much volatility here, a very constant, nice growing chart. Now, within the base chain, among the trending tokens, Virtual Protocol is the largest in terms of liquidity pool size. Have a look at this. There's $48 million worth of Virtual traded on the base chain. Even the Coinbase wrapped Bitcoin is less than that. And so that's then how that looks like over time, right? Even today, we see almost double the number of buyers compared to sellers. Now let's go beyond the price action. Let's have a look at the on-chain analytics. Let's see who's actually buying here, who is selling here. Is this small retail? Is this the whales? What's happening? Now on-chain, we've got more than 103,000 wallets that hold the virtual token. Let's have a look at those holders in more detail. What we see on the left is the number of wallets that have at least 500 virtual tokens. So at the current price, that's a bit under $1,000. That's what I consider retail. In the middle, we have the number of wallets with 5,000 tokens, or a bit under $10,000. On the right, another 10x in minimum holding. So that's 50,000 tokens, or almost $100,000 worth of the token. We can clearly see adoption over time, and we can see how small retail increased the number of wallets by roughly 4x since the beginning of September of this year. The number of whale wallets also increased since the beginning of September. It went from 200 to a bit under 600. So that's positive, but we can definitely see how the growth by small retail is slightly quicker. Now, what specifically happened in the last month where the price went up by almost 350%? How did the number of holders develop? The answer is over here. The number of small retail wallets grew to 12,311 from initially 7,229. So that's a growth in a single month of 70%. The number of medium-sized holders grew to 3,357, and the month started at 2,036.9 wallets. So that's a growth of roughly 42%. The number of whale wallets is currently at 579, and that is coming from 461 wallets. So a growth of 25%. So there's accumulation across the board. Retail tends to buy the fastest, but the whales are also supporting this rally. And because we do not see how the whales are dumping, that's the reason why the price can accelerate so much. Very often what we see is that the whales buy in early and then they sell to retail as the price appreciates. This is not what we see here with Virtual Protocol. The smart money, the whales, the people that have a lot of funds that probably also made right trades in the past, they continue to accumulate. This is very, very bullish. Now here's another chart for the last month, the number of new users over time. And especially in the last 7 days, this is rising very, very quickly. And also the ratio of new users versus returning users tends to rather trend upwards. Now here are 2 all-time charts again. So this is not the last month, but since the launch on the base blockchain. On the left side, we see the number of buyers and sellers over time. On the right side, we see this normalized to 100% per day. And we can clearly see how attention moves in waves and how we are currently at peak attention. There are more than 20,000 buyers and sellers per day. And 2 months ago, this was only 500 buyers and sellers per day. The ratio of buyers versus sellers over time doesn't seem to have a clear trend. Now, crypto as a whole is currently expanding very, very quickly. What we've got behind me is the stablecoin market cap. And this is a 3-year chart. So it starts in July 2021. And we peaked in the stablecoin market cap in April of 2022. Over here, what happened was the Terra Luna collapse. So this is when Anchor protocol went bust. This is when UST depegged. The market as a whole shrunk. Money was flowing out of crypto. And this is also where FTX collapsed. And then we saw the turnaround in October of last year. Now money is flowing into crypto again. And that's recently accelerating. The stablecoin market cap going up means, of course, that money is flowing from fiat into crypto. And that, of course, means that prices across all of the crypto space should continue to rise. I really like this chart because it has very little volatility. We can see the trend very clearly. In the short term, though, we might be slightly heated. What we've got over here is again a stablecoin market cap chart, but this time that's not in US dollars. This time it's relative to the entire crypto market. So you might have heard of the Bitcoin dominance chart, right? How much of all of crypto is currently in Bitcoin? That's, by the way, currently at roughly 60%. It tends to peak at around 70%. What we see over here is the stablecoin dominance. So how much of all of crypto is currently in the stablecoins? And there is a strong inverse correlation between this and crypto prices. So when the stablecoin dominance is high, crypto prices are low. And when the stablecoin dominance is low, crypto prices are high. And we seem like, at least temporarily, to hit some potential floor here, which might mean that some cryptocurrencies might see local tops. That being said, especially in the last few days, we do see how the altcoins tend to outperform the rest of crypto. So this is the others dominance. So this is the cryptocurrency market cap that's not in the top 10. And this did go up since beginning of November to today by 23%. It appears as if there is some kind of altcoin rotation happening. At least we see the beginnings of it. And so what was the best performer across all of the altcoins in the last week? It's Virtual protocol. Virtual is a launchpad of AI agents on the base chain, and it almost tripled in the last week. This is the long-term chart, very impressive. And the big question is, how can we buy something like Virtual when it's not up there, but when it's somewhere down here? My answer to this question is wallet tracking. It's trying to figure out what are other smart investors doing? What are insiders doing? What are people doing that move prices? What are people doing that tended to make the right calls in the past? And so it's always nice to see what is the smart money doing, what is the not so smart money doing. For example, this over here. This is an alert that BitBoy Crypto sold virtual tokens at 1.4 cents. We don't have the alerts where he bought this, so maybe he got some allocation because he's an influencer, but he sold his allocation. He did this multiple times, by the way. And again, what he sold subsequently went up by more than 10,000%. And so yeah, BitBoy Crypto, in my opinion, is pretty much the Jim Cramer of crypto. It doesn't make sense to copy trade him, but it's interesting to see what he's doing. There are other people though that are worth copy trading. For example, over here, we've got Crypto Gains that bought the virtual token. That was at 5.8 cents. So since then, the price went up by 2,500%. Who is Crypto Gains? It's this influencer here. He tends to buy tokens relatively early, and he tends to also be very public about his purchases, which can generate, of course, a lot of attention and can bring in more investors, pushing up the price further. So he does very risky plays regularly. He's got 138,000 subscribers. And so how do we get these buy and sell signals? It's through finding the right wallets first and foremost, right? It's doing some on-chain analytics to figure out those wallets. And it's subsequently by putting those wallets in a wallet tracker and get notifications whenever they buy and sell. So over here, we've got the wallets by Crypto Gains that we are tracking. We've got 55 of his wallets. But then at a later point in time, we also see more people buying into the virtual token. The people people that tend to deploy much more capital. For example, over here, we've got Kyle Chessy that bought $100,000 worth of the token, and that was at 48 cents. And so here is Kyle Chessy. He's got 137,000 subscribers. And since he bought, the price went up by 220%. We've got 12 of his wallets, and of course not every trade goes like this, but in general, right, I do believe it makes sense to follow the smart money. It is much better to follow the people that tend to make profit compared to simply just picking random tokens in a list. And so I like this approach that much that I made 8 dedicated tutorial videos just on this wallet tracking topic. They are over here. It's how to find various influencer wallets. It's how to track those influencers, and it's also about how to interpret the signals that we get from the tracking. It's all part of the premium membership of this channel that's down below, thebitcoinstrade.com. It's not just wallet tracking that we do, it's also risk mitigation, portfolio diversification, backtesting. There's more than 100 tutorial videos in total in premium. Once we've got a signal, we of course also have to discuss when should we buy, when should we sell. That's why we've got our dedicated chats for the individual altcoins as well. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. And so does it make sense to still buy virtual? I believe that the growth is very stable. We do see growth across all boards, not just retail investors, but also the whales are buying. On top of that, we also see now accumulation by the centralized exchanges. Because even though Virtual Protocol is the largest trending token on the Base chain, the trading volume does not just happen on Base. Most trading volume actually now happens on Bybit, followed by Gate.io. And we've also got perpetual futures, also spearheaded by Bybit. Now those market makers or centralized exchanges have an incentive to increase volatility. The more the price of a token goes up and down, the more trading fees are generated, the more liquidation fees are generated. And so even though I believe that 1 month from now we are likely going to see higher prices in virtual, we might see some crises in the meantime. We might see some crashes every now and then simply made by those market makers. And so whenever there's a crash, there's probably a buying opportunity. Now, since the Virtual Protocol is a launch pad for AI agents and those AI agents have their own tokens as well, the most upside is not necessarily in the largest of the tokens, the virtual token. The most upside, of course, is in the individual tokens because those are much smaller in market cap, right? Have a look at this. Game by Virtual is up 32% in the last 24 hours. Luna is up 13% and AI XBT is slightly down. But again, on average, right, if you held all 3 of those tokens, you'd be way more up compared to just holding virtual itself. I, by the way, made videos on the individual tokens here as well. Feel free to check out this channel. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.